Good evening, everyone. My name is Jason Maida, and welcome to the California Dream kind of info session that we're going to do. Tonight's discussion is just to kind of go over like a high-level overview of what the program looks like. And so for many of you that are joining tonight, you may have already connected with us for a pre-approval consultation, and you have a pre-approval for some of the current products available. And maybe you're tuning in tonight because you want to learn a little bit more about the California Dream. And for those of you that are maybe considering home ownership, hopefully this product will be a great resource for you to help you on that path towards home ownership. So tonight's session is going to be about 30 minutes. I'm going to basically share with you what I know so far about the California Dream product. We'll just kind of do a high-level overview of that. We'll take some questions. We'll walk through the process of home buying and hopefully give you enough information as you kind of continue on this path towards home ownership. In case we haven't connected before for a consultation, again, my name is Jason Maida. I'm the branch manager here with American Pacific Mortgage. We're based out of Sacramento, actually just a couple blocks away from CalHFA headquarters. And we are the leading provider of CalHFA assistance programs. So we work not only just in Northern California, but we're throughout the Central Valley, in Southern California, in the Bay Area markets. We love helping clients on that path towards home ownership. We teach educational classes like this almost once every week throughout the year. Last year, we educated over 2,000 future home buyers on that path towards home ownership. So we're really grateful for the opportunity to help serve our communities. In case you don't know what CalHFA is, because we kind of sometimes get CalHFA confused with FHA. CalHFA stands for the California Housing Finance Agency. As you can see here, it was established in 1975. And the goal of CalHFA is to create affordable and sustainable home ownership for our California communities. And with CalHFA, there's standard programs like the My Home assistance program, the ZIP assistance program. Those have been kind of staples of CalHFA. Last year, we provided the Equity Builder program, which was 10% of the sales price in assistance. That program has been eliminated now because we went through the funding of that. And now the California Dream for All program starts, which is going to help provide additional support for our first-time home buyers. So let's talk about what we know so far with California Dream. We're getting updates as we get closer to the launch date of the program. And so what we're trying to do with info sessions like this is just try to share with you kind of what we know about the program. And things are always subject to change. The state program is potentially going to launch March 27th. So that kind of moves up a little earlier than what I was originally sharing with our audience, which was April 1st. So hopefully that does come to fruition. So we're just over 30 days away from the launch of the program. What does this program provide? Well, it's up to 20% of your purchase price or appraised value in assistance. And that's the way the program is currently designed right now. You can use up to 5% of that 20% to count towards your closing costs. Ideally, most of our first-time buyers are going to use the full 20% to put down towards their home, because that does a few things. One is it lowers your amount financed down, so you have a lower monthly, and then it eliminates the need for mortgage insurance. Now, this assistance is what we've heard so far is going to be a no interest loan on the 20%, and it's not forgivable. So it does require to be paid back when you either sell the home or if you refinance in the future. And we'll talk about that in just a second. Now, the big component here, which it's important for us to understand as future first-time home buyers, there is going to be an equity share agreement on this particular program. Now, what does that mean for us? What it in general terms means is that if I purchase my home for $400,000, and let's say 7 years from now, I decide to sell that home for $450,000. Well, I've accrued $50,000 in appreciation over that time period. So at the time of sale, I would be, selling that home for $450,000. I would pay back my 20% no interest loan that I received from California Dream for All, but then I would also have the equity share component. So the $50,000 difference would be 20%. So you would have the 20% payoff for the assistance and then 10% of that appreciation. Okay, so that's kind of the big component that I think as future first-time home buyers that we need to kind of take a look at. Now, a few things with the California Dream. Like I said earlier, there is a refinance trigger. So if you don't have any payments on the 20%, but if you sell the home or if you refinance, that's when that is paid back. There may be potentially, and I say potentially, an opportunity to refinance one time, as long as that interest rate on that new refinance loan is better than 1% of your current mortgage that's being offered or that you currently have. Now, that is a possibility. We don't know that for sure, but that's kind of what we've heard. The product being offered, so the first mortgage product is going to be a 30-year fixed mortgage. That's standard for all CalHFA loans. All of the interest rates for this program are all set by CalHFA. So every day at 8 a.m., CalHFA posts the interest rates for the offered programs. And that'll be the same thing once the California Dream for All program launches. There is income limits for the program. We'll talk about that in just a bit, but every county has a set income limit, and we'll kind of share that with you today. And then as I mentioned earlier, the thought is that the program will launch by March 27th. That's hopefully the goal here. Okay. Now let's just kind of look at a quick example of what this could look like for you as first-time home buyers. I want to use a scenario which would be typical on a conventional loan. So when we think about conventional loans, those are Fannie Mae, Freddie Mac loans. And by the way, for this California Dream product, it will only be for conventional loans. So for FHA loans, it wouldn't be compatible. So it's just going to be for a Fannie Mae loan. So if I purchase a home for $450,000 today, generally my minimum down payment is 3%. So we know that would be $13,500. When I purchase a home, and we've talked about this if you've joined us for previous consultations, usually the closing costs are anywhere between 2 to 3% of our purchase price. So usually for my out-of-pocket expense, I'm going to need to save anywhere between $22,000 to $27,000 for my home purchase if I'm buying at $450,000. Now with California Dream, now I'm able to potentially get up to 20% of that sales price, which would be $90,000. And I can use that $90,000 towards my down payment. I can put all 20% down towards the down payment, or maybe decide to take $80,000 and put towards the down payment, maybe use the other $10,000 for my closing costs. So it'll really just be dependent on what's the optimal way to kind of construct your financing when we design a home buying plan using this product. Now, we're going to talk a little bit about the process of buying a house in just a bit. When you look back at these numbers here, just because we have expected cash to close $0 to $12,000 in that scenario does not mean that you won't have an out-of-pocket expense. In case you haven't attended one of our classes or done a consultation with us in the past, there is what we call an earnest money deposit that's required for your home purchase. So once a seller accepts your offer, you will be required to make a deposit, which can count towards your total out-of-pocket expense. Usually that deposit is anywhere between 1 to 2% of your purchase price. Okay. I just want to kind of open it up for questions here, because we're going to talk a little bit about the other CalHFA programs in just a second. So I want to just kind of open it up for our audience here. Is there any questions that you have so far about California Dream that I can help answer? Okay, so we had our first question come in. So question around refundable deposit. So is the deposit refundable since CalHFA will cover it? So it's not necessarily how that works. So an earnest money deposit is deposited into escrow, and that money is held there as a good faith deposit for the home purchase. Now, if your financing is constructed enough where we have enough assistance to cover your total out-of-pocket expense, including down payment and closing costs, then you could be potentially refunded that amount of earnest money deposit at closing. But it's not a given. It just depends on how your financing is constructed. We're going to talk about, well, next question was, what are the requirements to qualify? So I'll give you the requirements, then we'll talk a little bit about income limits. In fact, I'll have Ken, who's kind of helping us with our Q&A, also put those in the chat so you can see the income limits by county. But there's kind of 3 criteria for the home buying program. So one is you have to be a first-time buyer. A first-time buyer is someone that has not purchased in the last 3 years. There is a minimum credit score of 680. And then there's the income limit requirements. And like I said, you'll see those in just a bit. Those vary by county. So if you're joining us from Sacramento County and you're looking to purchase here locally, the maximum income here is $202,000. So another question came in, do you have to repay the entire loan amount plus the appreciation portion when you refinance? So that question is going to be answered once the final guidelines come out of the program. So we don't know the answer to that. As I mentioned earlier, potentially there may be a one-time option for you to be able to refinance as long as you're improving your interest rate by 1%. And that's called a subordination. So basically we would subordinate the 20% assistance to allow you to refinance at that lower interest rate. So that's going to be one of the, we don't know yet, situations, but as soon as we get the guidelines, we will definitely let everybody know. The guidelines I'm hoping are going to be available to us middle of March. So what I'm encouraging clients that if you're currently pre-approved and you're looking to have your pre-approval updated with the California Dream product, or let's say, you know, after attending tonight's session, you want to apply for the California Dream. We're not going to be officially pre-approving clients on this product until probably somewhere around March 16th, March 17th. And hopefully by that time, we'll have the official guidelines. We just want to make sure we have all the full details before we give clients the okay to move forward and start home shopping utilizing this product. Okay, so let me just kind of go through a couple more questions for the group. I think it'll be helpful for the entire audience tonight. So I'll just repeat, the minimum credit score for the program is a 680 for the program. Okay, and that's a minimum credit score for the California Dream. And then the other question was, is the California Dream for legal residents only or for others coming to California on orders? I'm not quite sure with that. The way the California Dream product, you have to be purchasing in California. For your citizenship status, that can vary depending on the eligibility with Fannie Mae. I would take that question offline. We can kind of talk about your situation there. If it's for military orders, which I saw a follow-up question, as long as you're going to be purchasing in California, then that could be you could potentially be eligible. And then when do the income limits come out typically in the given year? So the income limits are already out for the program. Every June, so June 1st, CalHFA updates the income limits for all of their available products. And so in the chat, Ken went ahead and posted the income limits for you for the counties. And hopefully that'll be helpful for you. We're going to talk a little bit more about specifics on My Home. I'm sorry, not My Home, but CalHFA in general, because when we think about the income limits, the income is going to be based upon the applicants that apply for the loan. So one of the examples we use is if I have a spouse and our combined income exceeds the income limits, if I decide to apply just in my name, then my income is the only income that gets accounted into the equation. Okay, we're gonna keep things moving here. What we'll do is, and we'll kind of take more questions as we go through the content. Now, I'm going to kind of shift gears a little bit away from California Dream for just a second and talk to you about some of the staple products that we offer through CalHFA. There is the My Home Assistance and the Zip Assistance program. My Home is still really popular right now, which that provides up to 3% of your sales price in assistance for a conventional loan, 3.5% for an FHA loan. And the difference in that program is that provides a deferred low interest loan at 1% for that 3% or that 3.5%, and that can be used towards either your down payment or closing costs. Similar to the California Dream product, it does not require to be paid back until you either sell the home or if you refinance in the future. And there is no equity share agreement with that particular program. Now, there's an add-on product called Zip Assistance, which provides anywhere between 2 to 3% of your loan amount for closing cost assistance. That's a no interest loan that can be added on to My Home. The My Home would be the first product available. And then if a buyer needs additional funding, the Zip Assistance will be added on to help provide some additional support for closing costs. There is a difference in interest rate offering for My Home versus Zip Assistance. So the Zip Assistance program will elevate the first mortgage interest rate. So not always a great fit for some of our first-time buyers, but certainly an option if extra funding is needed. So a question came in: can we get approved for different products to shop, but approved for California Dream when it's time to buy? So absolutely. So what we're doing right now is we're pre-approving clients on the current availability with CalHFA. So like the My Home Assistance program or the Zip Assistance program. And then we're running scenarios during your consultation. So when we get closer to that mid-March date and we know specifically what the program guidelines look like, we can transition a buyer into that program. And generally what we're going to do is set a follow-up consultation on the calendar so we can review the current numbers. And then another question came in about some changes with FHA. So FHA announced a reduction in the mortgage insurance premium, which is going to be great for first-time buyers. So it basically lowers the MI premium from 0.85 down to, I think it's 0.50, which is going to be a huge opportunity for first-time buyers. I need to look at the exact date on that, but that would not be applicable to this particular product. Because this is just for the conventional product. That would be for an FHA type loan. And then the other question came in: can we combine California Dream with other products like the Zip program or My Home? And that would be no. Unfortunately, California Dream is kind of a standalone product. And because it's a significant contribution of 20%, that would certainly be a standalone. Okay, great questions. I appreciate you guys having that interaction. I want to show you just a quick example of how My Home could potentially help a first-time buyer in case that's more appealing to you as your home buying plan goes. So I'm going to kind of go back to that same example of buying a $450,000 house. The expected cash to close $22,500 to $27,000. If I utilize the My Home Assistance program, as you can see here, the My Home Assistance is 3% assistance. That would help offset my minimum down payment requirement. And then potentially add on the Zip Assistance, the 2 to 3% of my loan amount. And then I have that additional support to help reduce my total amount of money out of pocket. Most of our first-time buyers currently right now are electing just the My Home Assistance program because just from a budget perspective and the overall interest rate offering, it just makes a lot more sense to utilize just the My Home Assistance. Okay, so in case you haven't attended a class or maybe even done a consultation with us, we teach home buying classes that kind of focus on not just products, but credit, down payment, and then what the process looks like for home buying. So I thought in tonight's session, I would just walk everybody through the 6 steps of home buying so you can kind of have a visual tool and what it looks like to be pre-approved for some of our available products and hopefully the future California Dream product, and then kind of take you through what those different milestones look like. So step 1 is going to be your pre-approval. So that's like the output of a consultation with us. And what it is, it's a certificate that you can provide to a seller that shows that you're eligible for your financing. Usually that pre-approval form is good for 60 days, but we can always easily recertify that pre-approval for you or do a follow-up call maybe because maybe products have changed. Very similar to what we'll probably do with the California Dream product. So a lot of our clients we've met with today, we've pre-approved them for the available products. But if there's interest around California Dream, then we'll set a new follow-up consultation time sometime in middle of March. Okay, so the pre-approval is the output of a consultation. And then step 2 is going to be our house hunting. So many of you have already even started the house hunting phase. Generally, you would partner with a realtor The realtor is going to be someone that's going to help kind of find the right communities for you that fit the criteria that you have for in a home. When you get to a place where you decide to submit an offer to a seller, they will be the ones that construct the offer and help negotiate terms. Now, in case you didn't know, in California, realtors are paid for by the seller. So we always recommend taking advantage of that resource. I think that's a great team member to have for you in your home buying journey. Now, if you decide to make an offer that maybe is a little bit different than your pre-approval that we gave you as part of your consultation, we can always send you a new pre-approval that matches the sales price of the offer that you're going to submit with your realtor. Okay, so a lot happens in that step 2 process. Now, if the offer gets accepted by a seller, then we're going to move to step 3. And that's called entering escrow. So a seller has said, yes, we're willing to accept the terms of your offer. And within 2 to 3 days of that offer acceptance, as a buyer, we'll be expected to make an earnest money deposit into escrow. So we talked about it earlier in tonight's class. An earnest money deposit is a good faith deposit, and it's usually 1 to 2% of your purchase price. In the Bay Area, sometimes we see is around 3%, and we also see that at times in Southern California. Now, once we get notification that your offer has been accepted, we're going to give you a call to talk a little bit about next steps in the process. And we're going to schedule you for your follow-up consultation. And that follow-up consultation is connecting with us back over video, go through the terms and conditions of your mortgage, talk a little bit more about the process and what to expect. And that usually happens within the first 2 to 3 days of that accepted offer. We're also going to get your appraisal ordered for your house. Your realtor will generally order inspections for your home. And then within 72 hours of your offer being accepted, you'll also get disclosure sent to you that's going to highlight all the things that we've reviewed during your follow-up consultation. So here's a slide that kind of shares with you a little bit more about what is an earnest money deposit. So it's 1 to 2%, as you've heard me talk about a couple times, and it's held in escrow. Now, that deposit is protected in most contracts. You'll need to have a contingency in your contract. If you do, that contingency allows you to do your due diligence on the property, which that due diligence includes a contingency for your appraisal. So you want to make sure your house is worth what you're purchasing it for. You want to get your house inspected, and your realtor will help organize that inspection time and date. You want to get your loan approved, which is, of course, what will help out as the lender. Usually those contingencies will be anywhere between 14 to 17 days. So in the first 14 to 17 days of your contract period. So after we have that accepted offer, we've done your follow-up consultation. Now we're going to start the administrative tasks of a loan, which includes processing the loan. We verify your employment. We verify all the documentation you've provided to us. Generally, by that time, we've either decided to lock in the interest rate because of the market conditions. At times, you may float the interest rate because maybe the market is improving. And those are things that will help educate you through during step 3 of the follow-up consultation. So at step 4, we're going to submit everything to our underwriting team. And if everything goes well, they'll issue an approval at step 5. So that's the loan approval. It also brings us to almost the end of the contingency period. So we're about 3/4 of the way. And as long as everything gets approved, the appraisal checks out and supports the purchase price of the home. If you're comfortable in moving forward after you've seen your inspections, then you can release your contingency in the contract. Now, we just want to make sure that once we do that, that basically tells the seller that you're comfortable in the homework that you've done on the house and you're okay to move through the final stages of the process. At step 5, we're also going to issue to you a final closing disclosure, and that gives you a 3-day cooling off period because we want to make sure all the numbers that you're seeing on your closing disclosure match up to your expectations. And so you're going to get that 3-day cooling off period before you can sign final documents in person with a public notary. And that happens at step 6. At step 6, you're gonna take about an hour and a half out of your day to sign documents in front of a public notary. At that time, you're also going to, or after that occurs, you're going to wire in your final funds for your home purchase if there's any remaining amount due. Once that occurs, then the documents that you have signed will be returned to us as a lender. We're going to do a final audit of all the documents to make sure everything is signed properly and everything is matching up accurately. And then once that occurs, we're going to wire in the funds for your mortgage as well as the assistance programs that you've elected. So that money gets received by the escrow company, very similar to how your deposit was received when you first had your offer accepted. That money gets balanced by the escrow officer. And as long as everything balances out and everything looks good, then they're going to release documents to the county recorder's office to record. And they record a couple documents. They record a grant deed, which transfers ownership to you. They also record a deed of trust, which is your agreement to repay the loan. And so once we get confirmation that those documents have been recorded, guess what? You guys become the official owner of the home. So that's kind of how the process works. We'll take you back through that during your follow-up consultation, but I thought it'd be helpful in tonight's session just to kind of share with you what that kind of looks like. A question came is, do you not fully underwrite loans before the buyer starts shopping, or is it always done after acceptance? So at times we'll underwrite loans prior to the client shopping for homes. It really depends on the buyer situation. If there's some things that maybe we're concerned about, whether it's income or credit, or maybe the debt to income ratio, then we'll recommend a full underwriting approval. But if everything meets the matrix and we don't have any concerns on the buyer's financing situation, then we'll allow the home shopping to start with the pre-approval. 95% of the time, most clients are going to start with a pre-approval to start the home shopping. But at times there may be some current concerns that we want to kind of go in and dig a little deeper in to make sure that we have a good home buying plan for the clients. Couple things to think about when you're looking at we call it the home buying game plan, right? When we meet with you for a consultation, it is a soft credit check. So that's how we begin our process. We do a lot of kind of working through budgets to make sure we're creating a sustainable and affordable home ownership for you. We'll talk a little bit about location during the consultation, because depending on where we want to buy, that's going to drive, ultimately the purchase price of the home. We look at some of the qualifying aspects like debt to income ratio. We're going to kind of put together a credit plan for you if there's any areas of opportunity with credit. Of course, talk about interest rates and cost structures, and look at the process. And then, of course, coming out of the consultation will be the pre-approval. Now, if you haven't connected with us for a consultation, I know I've seen some of our audience members that are actually existing clients that have done consultations or have consultations upcoming. But if you haven't got a chance to get connected with us to submit your application and upload your documents and book your consultation, we have all the information here on the screen. So, we would love to be able to connect you with you for that consultation. That's a 30-minute session where we're going to go and do that game plan to help put that home buying plan together for you. If you do have some follow-up questions after tonight, maybe they didn't get answered on tonight's session, we do 15-minute intro calls. If you want to kind of walk through your scenario, or maybe there's some questions you have about your personal situation with financing, I would love to be able to connect with you for one of those sessions. Okay. And the link is all right here on this slide if you want to go ahead and schedule that. Now, some of you may be joining tonight's class because some of our partnerships, we have some awesome partnerships across the country for some of our alumni that we partner with. So we teach educational classes very similar to this once a week, as I mentioned earlier, and a lot of them are aligned with some of our alumni partnerships that we have across the country. And within those partnerships, if you're alumni of Sac State, USC, and you can see the other schools, we do provide a discount in closing costs. Even if you're a state employee too, we also have a discount program as well too. Okay, so just want to encourage you to kind of check out some of those discount programs. All right, so we're gonna kind of come to the end of tonight's session. I know there's some more questions probably out there about California Dream. I had a question that came in, and I think, let me just kind of just read it for the group here. Okay, so a question on the California Dream, and just to kind of just clarify for everyone. So the guidelines have not been established for California Dream. So the information I'm sharing in tonight's session is not the finalization of the product. So what I'm sharing with you is just information that we know so far. Like I said, I want to try to get you the information as soon as possible, but certainly there could be some changes that come over the next 30 to 45 days. So a question is, if you take out the California Dream product, do you owe the entire amount borrowed back, or just 20% of the appreciation? So the answer is you owe both. So you owe the 20% no interest loan that would be owed upon seller refinance. And then you would also owe the 20% appreciation component. If the house, of course, does not appreciate, then you would not owe the 20% appreciation, but you still would have the no interest loan of 20% that would still be owed. Now, as I mentioned earlier, there is talks that if you refinance, there may be an opportunity for us to not have the 20% repaid upon a refinance as long as you improve your interest rate by 1% on a potential refinance. Okay, so hopefully that provides some clarification there. I know there's a lot of moving parts there on the program, and we do want to try to give you as much information on this product as possible, but things are changing. In fact, as I mentioned earlier, the date for launch has changed a bit. So we actually thought it would launch a little earlier in the first quarter, but our latest information is for it to come out on March 27th. Okay, any other questions I can help answer for our audience tonight? Okay, well, I will tell you, we'll be doing more sessions like this as we kind of get more information. So I'll be kind of passing that along to our clients that we're currently in contact with. And we will do another info session as we get closer to the launch of this program. It looks like there's a few more questions that kind of came in. So let me make sure I get those answered for everyone. So my question is, as a lender, what are your thoughts on the Dream progress? What are some pros and cons? So I think, for my opinion on the California Dream, I think it's an awesome opportunity for first-time buyers. I think when we look at the available assets for most first-time buyers, it's anywhere between $8,000 to $10,000. So I think this presents an opportunity that most first-time home buyers would not have. Some of the early calculations we've done for some of our consultations we've had with clients, we've seen savings of $600 to $700 a month just by having that additional down payment. Because when you put a minimum down payment, if it's 3%, you're influencing your amount of financed. You're also influencing your mortgage insurance. And so sometimes it's just not affordable for some of our first-time home buyers. So I think there is an opportunity out there. Now, is it the right product for everyone? Maybe not. But I think as we kind of build home buying plans for some of our buyers, I think this could be something that could make homeownership a much closer goal for many out in our communities. So question was there an equity component too? I think we're getting maybe the equity and appreciation flipped around. So it's the appreciation. So if the home, as I mentioned earlier, if we buy a house for $450, goes to $500,000, that $50,000 increase would be what the 20% shared appreciation we based upon. Okay. All right, I think I got through most of the questions, if not all of them. Any other questions for our audience? All right, I think we're good. Well, I really appreciate everyone joining tonight's session. We will get another info session out as we get more information. And we do hope that this information was helpful on your journey towards homeownership. And if you would like to connect with us for a consultation, we would love to be able to kind of help design that home buying plan for you. If you've already connected with us and you're an existing pre-approved client, let's definitely get connected middle of March for a follow-up consultation so we can see how this new product could potentially benefit you. Okay. All right. Have a good evening. I look forward to talking to everyone soon.